Hello, welcome. Money, money, money. And it's harder to come by these days, so I'm sure that you're all very interested to hear what our two experts, Sally Duckworth and Susan Cummings, have to say about raising money in the current landscape. Sally is on the investment side. Susan is a founder, so she's raising funds. And we're going to touch on the fact that actually Sally's group, Fabric Ventures, is also raising their own round. So you're going to get a really interesting perspective between the two. So let me first introduce Sally. So Sally is currently COO of Fabric Ventures, a VC firm that invests into emerging tech, primarily Web3. She's held roles as chairwoman, CEO, CFO, nearly a dozen NED roles, won awards for NED roles. And then to her left is Susan Cummings, who is the founder and CEO of Petaverse, which is a virtual pet platform, now in its fourth generation, I believe. So I'm going to start off with one question to each of our panelists here about what is the one principle, the one philosophy or practice in raising investment or deploying investment that have served them well through their careers. First to you, Sally.
Hi, everyone. Thank you for coming. So I think it's particularly pertinent in today's market, but it's always been a sort of truism for me that you need to plan and to really think for the long term. So a lot of people, when they're raising funds or equally deploying funds and raising an investment fund, are only thinking about the next funding round or they're thinking about the next fund. But actually, you need, through the course of your startup or through the course of your venture fund history, to create a story that works consistently over the long term. So sometimes, for example, entrepreneurs get very excited about having achieved a huge valuation. And a lot of people, to be fair, have done that in the last couple of years, particularly in the Web3 space where Fabric has been focusing. But the problem with that is now, as the markets have rationalized and we've had the crypto winter, is it's going to make them much harder for them to go out and raise follow-on funding. And actually the same applies to Web2 companies at the moment that are struggling with a large preference stack, a high valuation, and now they're coming to their next round, and it's much harder because they didn't really plan for the long term what each funding round was going to be and what they were going to have delivered and achieved by that point in time. And I think the same applies for venture funding when you're looking at starting a venture firm. You have to think about, what's our funding cycle going to be? How often are we going to raise new funds? What do we need to have shown by the point that we get to that next fundraising cycle as our milestones for success, which will enable us to go and raise that next round? So you always have to sort of plan ahead and think for the long term, and don't let short-term greed or sort of optimism destroy what will eventually be your long-term pedigree and history that will be the foundation that you constantly rely on.
Brilliant.
Hi. I think that there's a real danger in chasing technology trends. Over the last 2.5 years, we watched it go from Web3 being where everyone wanted a strategy and wanted to invest, to now AI and ChatGPT and so forth, and machine learning. And that's already starting to taper off as so many companies are making the same thing, essentially. And so I think you have to think about the consumer and think about a product that you can sell, and think about where these technologies are best utilized to be enhanced by this technology. Because I've watched so many companies pivot. As a game developer, I watched game companies being pushed by their investors or by raising to have an NFT strategy, to have a Web3 strategy, where it didn't make sense. And they've all largely pivoted away from that. And I think the same thing is happening with AI. Everyone wants to pepper AI in their decks. And I think that what's resilient is just building great product and embracing these technologies where they make sense. And I think that the investors you attract by doing so are the ones who are going to be there with you through these technology trends and not pushing you this way and pushing you that way.
Yeah, I think it's such a great point, and it's so refreshing to talk about adapting, but adapting intelligently, right? And not moving simply with the trend, but you're serving the consumer, right? So how do you, Susan, how do you know when you're adapting intelligently, or if you're overcorrecting? What would be your sort of insights on that?
I think when you build good product, I think this happens naturally. You know, in our case, we started our project 2.5 years ago as a game. We adopted Web3 for very purist reasons at the time. We were and still are passionate supporters of digital ownership and empowering a consumer, and the idea that you don't have to worry about losing your stuff. We were never purists about it in terms of everything has to be Web3. And when things started to change and the space has become so toxic for the wrong reasons, you know, it's just filled with scams, and because we're early, that's all the mass market sees are scams. And so we realized that we had to soften that. We had to empower the consumer to decide if blockchain was for them or not. So that was a natural evolution of our project to say, we're going to take a Web 2 first approach to this. And the same with AI. We started dabbling with ChatGPT when it was in beta and started to look at interesting ways it enhanced our project. And so over time, you know, if you looked closely, you'd say, that was a pivot, that was a pivot. If you stepped back and looked at how it grew, everything made sense. And so, you know, I think when you're a startup, you have to foster this environment of agility.
Yeah.
And we've had, over the last year and a half, since we raised our seed round, that we've been, you know, really in build and growth mode. We've a few times now that we've had to course correct a little bit. You know, whether it was who our consumer is or how Web3 we were, you know, or whatever it was. And your staff, your team need to get comfortable with that and not feel like they're throwing things away. And that's certainly something I've learned, and I've learned it about hiring too, that in a startup you need to hire people who can roll with that and who don't feel like their head's spinning, but understand that there's a goal that you're trying to get to.
Yeah. And so, Sally, I'm going to pass to you about adaptability in raising. So I know that Fabric's about to go into raise another round. So I've seen other Web3 funds start using AI and dropping AI into their podcasts, their websites. They'll remain nameless. But how are you adapting when you go in to raise your next round from LPs, family offices? How much are you adopting? And also, what are the strategies for some of the investors in the audience that you engage when you're going to raise your next round? I'm guessing that you plan 3 years ahead.
So Fabric actually has a very long history. It originally was evolved from a Farstarter, which was our sort of Web 2 sort of investment vehicle, where they did a number of deals in the sort of technology space. And if you look at the Fabric team, most of the senior leadership and a lot of the people that actually work within Fabric fundamentally have been involved in technology for most of their career. Certainly in the senior leadership team, we've all known each other for years and we've all been involved in technology. So if you look at Fabric as a whole, our thesis has evolved over the years anyway. You know, Farstarter was very focused on Web 2 type opportunities. The first fund at Fabric has been focused on Web 3. Every time we do a new fund, we radically refresh our thesis and we look at what can we see in the future? What do we see that the problems are that need solutions where technology can help address those? And what do we see as the trends and the interesting opportunities that are evolving technically? So yes, I'm sure that AI will be part of our thesis, or as I sometimes call it for the most part, machine learning, because a lot of what people are doing when they're putting the little AI sticker on their project is actually machine learning, which we've been doing as well for the last 10, 20 years. So I think you have to be a bit careful about just putting the badge on because a VC will buy it, because they'll see through pretty quickly that you've put the Band-Aid on. But we're constantly looking ahead and seeing what's happening and what's evolving. There's all sorts of different things that I think could come to pass in the next 10 years. But Fabric has always been very visionary in the way that they've approached that, and they aren't confined by kind of what's popular at the moment. We go into great detail when we write our thesis, and we make sure that when we're investing, that we're constantly looking back to the thesis and we're going, does this fit with our investment parameters? I mean, I do think everyone has to be flexible, but that's partly because technology is evolving super quickly anyway. I mean, AI is the buzzword now. What will the buzzword be in 2 years' time? Almost undoubtedly not AI. It will be something else. So if you're passionate about your technology, you're just in a very quickly evolving space anyway. So you have to be agile about how you approach that.
So technology is always emerging, and ultimately it needs to solve a business problem, it needs to solve a consumer problem, and I guess if you focus and keep focused on that as it evolves, right, and whatever emerges next, you're well placed. I'd like to talk, kind of double click into the customer, and I'm going to pass to you first, Susan, to talk about customer acquisition and retention. So when you're a B2C brand, I think we've just come out of this period where we can see that acquisition at all costs is not sustainable. And retention is incredibly important, and not just retention through discounting, but real true loyalty. So maybe can you give some advice or your insights to the audience around acquisition today, retention today?
Yeah, I think that's what's really interesting right now about the fact that in this market, the people who lasted are focused on building. And if you look at the Web3 space, NFTs were largely about churn. It was about buying something, selling it for a good price, and hopefully making a lot of money, and that was it. And the problem with that is your community constantly changes. If the point is flipping something, then you're constantly losing your community. And so I think that's where there's really an opportunity for product-focused companies, because it really does have to be about how do you bring people in, what keeps them around, why do they stay there, why do they tell their friends about it, how do we get to millions and millions of people as opposed to 10,000 people, which isn't a market for anybody. And I think that's also about reading the room once again and understanding the consumer. For us, it meant recognizing that most people still don't understand why, other than the select sort of degen category, people didn't understand why they should care about Web3. So we took a step back and said, that's fine. You know what? Let's give the consumer what they want and give them time to learn and understand and see if it's for them. In the case of blockchain, it's supposed to be about consumer empowerment. So isn't the ultimate consumer empowerment about letting you say yes or no? And so I think that's really important. I think that customer acquisition is very hard in the game space, which is where I come from. I've been in video games for 26 years, and it's harder than ever. Apple made changes last year that are making it very painful for game companies to try to acquire users. So in that case, it's more expensive than ever. Unity has announced changes this week that are once again going to throw yet another curveball at the industry in terms of them wanting to charge per user, per install. So it's a very tough time.
Okay, Sally, what's your point of view?
Yeah, I mean, I think it's interesting, and I was having a conversation actually last night, drawing analogies between sort of what happened in the sort of early 2000s with the cycles that were happening with the internet, with Web 2, and what's been happening in the last couple of years. And I think you can see where we are in the cycle. We've had a massive correction. And actually, I think the companies that come out now and that do find things like product market fit, and they find a solid customer as opposed to consumer base, are the ones that will survive. So I get quite excited about investing at this point in the cycle, because you sort of sort the wheat from the chaff. It's going to be very difficult for a lot of companies. They probably won't secure first round funding, or they won't secure their follow-on funding, just because the point we are at the cycle means there's a lot of founders not chasing quite as much cash, and it's much harder to get it. But you do tend to get more robust startups coming out at this point in time, because they've you've had to be more selective about how you do it. And in particular, we look for things like, the very obvious things like product market fit. Is there a genuine need or demand for what you're going to serve, be it product or service? Is this something that people really want? You never want it to fall in the category of technology that's looking for a home but can't quite find the go-to-market or business model. We also, as a VC, are always looking for things that are easily scalable because our focus is on growth. So that's how we make a return, by having companies in the portfolio that grow quickly and rapidly. We always look for visionary leadership, and we also always look for technological innovation. But I think at the point in the cycle we are now, it will be harder to acquire customers as well. I mean, I'm seeing it everywhere. Spending is down, restaurants are empty. Everyone is struggling at the moment to attract the customer, to actually be paid for their service. But I think if you can do it now because you come up with something that people genuinely need, then you're setting a really strong foundation for the future. So times are tough and it's difficult now, but if you can make it work now, then your chance of success in the long term is much higher.
Yeah.
So just to add, I was going to say that cash is clearly king right now, and that's what my advisors are all telling me as well. Is that the VC capital isn't easy to come by. The valuations are down, and so if you can find a path to a customer and revenue, if you can find a path to partnerships because you have users, all of this stuff is another way of funding us over this bear market. And so I think it's really important right now. Once upon a time it didn't matter, and a lot of bad business models came out of that too. I watched it in the Web3 space, people giving free NFTs away with no clue how they were ever going to make money. That stuff starts to go away when all of a sudden you actually have to worry about profitability, right?
Yeah, talk about profitability, not just growth, but profitability. So founders they're in quite a crunch, right? It's a tough time because consumers are spending less. As far as being able to raise capital, that's become more difficult as interest rates and inflation get up. So what would your founders need to be more resilient? But do you have like a top tip? I guess bootstrapping. What advice would you give to founders right now who are figuring out their product market fit?
Well, the best thing has always been, and the businesses I've always liked the best, have been ones where you've already identified very clearly what the problem is that you're solving. And ideally, you may even be working with a partner in conjunction, collaboratively, to come up with a solution that will meet their needs, but doing it in a way that's scalable to the broader market. And equally, if you're doing a consumer-based product, you really have understood your product market fit, and you've got conviction that when this goes to market, it's going to work, because you're talking to the partners that already have product that will kind of mesh with yours. So I think it's really important at this stage to get the product market fit right and to get the business model right, because that will stand you in really good stead for taking it forward. And if you can evidence that at a really early stage, then that significantly de-risks the proposition for a VC that's looking at it as a potential investment opportunity.
You said you have the product market fit. We can see how we can scale this because there's a business model there. So I'd like to pass to you, Susan, about some of these within the gaming space. Big valuations, lots of money has been raised for businesses, and I know we were talking the other day about not all of them. They've burned through some of that capital. They might not be able to go the final mile, if you will. What's your kind of point of view on the market on that?
In some ways, I'm really expecting a bloodbath there, to be honest. It's not even a hot take on it. There are so many companies during the pandemic that raised capital for big AAA projects on the back of the success of so many games then. But it was obviously a bit of a blip during the pandemic. Everyone was stuck home, so they were playing video games, they were watching movies, etc. And all of that.
Web2 companies too, right?
And all of that is leveled out.
Social.
Exactly. I mean specifically Web2 game developers making big console games. And so a number of VCs came in essentially taking on the role of publisher, and funding these big projects with the notion that there would be a seed round, a Series A round, a Series B round, and then get to market. Most of them are stalled at that Series A to Series B stage because they don't have enough users and information yet to raise exponentially what that next round looks like. And so some of them are being pushed to get publishing deals, what they were trying to avoid in the first place, the reason that they gave up so much equity in their company. But the publishers want huge royalties or it's not worth it for them. So there's a very bad dynamic happening right now, and a lot of game developers struggling to figure out how they're going to get that last step.
Right. and the acquisition of users, as we were saying before.
Yes, and exactly.
Yeah. So I'd like to pivot a little bit into, we are at an AI conference, and with the wealth of experience that both of you have in the Web3 space, I'd like to hear your point of view on how AI and Web3 converge, how they play nicely together, how they might even need each other. So what do you see as kind of, I guess, the challenge or the opportunity as we see Web3 and AI converge?
Well, they're both technologies, and if you look at most businesses, they actually still use some Web 2 as well. So I see them as, they're all building block components that sit together, and depending on what you're trying to do, there will inevitably be more of a proportion of one versus another, depending on what the ultimate solution is that you're building. But I see them as being very compatible. I mean, when you're talking about AI, what you're really talking about is the ability to process data in a much more automated way to give you insights, be that on the genomes that you're going to use for your next drug therapy, or how you're going to manage the the pestilence on your crops better, or whatever the application might be. I mean, the applications for AI in itself are huge. And then Web3 has some very distinct sort of advantages and USPs that it can benefit as well. So I see them being very complementary, but I also, in most solutions, I would anticipate that there will be other aspects to the solution as well, which actually will just be sort of, what we would maybe call Web 2 technology that bolts together to give you your final product. I mean, I know we were talking earlier with Susan about how you can access her product, and actually she's moved beyond just a pure Web3 interface to actually have a Web2 interface, so the customer is empowered to decide what they want to do, and they're not fixed by being forced down a particular technical route. And I think people that build technology solutions, they'll use all the tools that they have, and they should use the best tools available to deliver whatever it is that they have decided is the product that the market needs.
Do you think that AI is going to become an assistant in developing UI and UX, and do you think it will help to bring on adoption of kind of Web3 technology?
I mean, there's so much we can already do with AI, and I think people are only touching the surface. As I said, most of it is still machine learning. But if you start playing around in Hugging Face and things, it's amazing. I mean, I'm not an artist, and I've generated beautiful art, and I'm definitely not an artist. But it's amazing. It's amazing what you can get the AI to do for you. I haven't actually yet tried to build a user interface, but I guarantee it would do a better job than I would do of anything. So it's a tool that we can use to make some of the things that we used to do manually much more efficient and effective. So to that end, I think we'll be able to do a lot more rapidly, but I think you still need to come back to that. You don't want to just develop something that no one wants, that technology looking for a home aspect. You've got to work out what is the need that people have, or what is the demand, if it's sort of on the entertainment gaming side, what is it that you're trying to solve for, and then focus on making sure that you deliver something that actually will be wanted by people. Ultimately, it has to be wanted, because at some stage you have to monetize it some way. So people have either got to use it a lot or be happy to pay to use it to make sure that you have a sustainable business.
I couldn't agree more. I mean, with everything you just said, I think that the smartest funds and the smartest founders try to bring technologies together for where they're useful. I think the danger right now that I'm seeing is the same thing that happened with Web3. So many companies raise money on a tool that nobody needed, or where there were 50 of them being funded. Like, if another wallet reaches out to me to tell me why I need their wallet, I'm like, Jesus Christ, my inbox is flooded with wallets. And,
but that happened in Web 2 as well.
Totally,
Suddenly everyone, it's on the web. And there were a lot of businesses that I saw that were, because I was actually investing very actively at that time as a Web 2 VC, and I was like, this doesn't really suit the business model. You've just put the Web 2, or internet as it was named then, Band-Aid on this because you're trying to get funding from me. So I think that's human nature when a new shiny technical toy comes out, that everyone tries to put that badge in. But if you're smart, you go, what's the problem I'm solving for, and which tools in my big tool set, which has just got bigger because you've just given me a whole load more tools to play with, should I deploy?
And what can a developer really do for themselves? Like, I see a lot of these companies coming at me saying, use our bit of tech. I'm like, we've already built that ourselves. There's so many things that developers don't want a middleware solution for. And so now we're seeing it with AI. I see loads of, we're going to allow NPCs to all be built by AI. AI are going to power the future of NPCs. Really? The best use cases I've found in video games for AI is to make our processes more efficient.
Right.
When my partner is our lead creative, when he wants to articulate something to our art team, he can now go into DALL-E and give an example. That's not the one we're going to use, but it saves us a lot of time to say to the art team and our concept artists, something like that, but better. And then they can iterate on and hand it to the 3D artists and stuff. So it's these efficiencies. Like, AI helps to make us a little bit better at the things that we suck at.
Yeah.
If you're an artist and you can't write, it can help you with that. If you're a writer and you can't do art, it can help you with that. And so I think that that's the smart stuff, not just adding a layer on top of stuff and calling it a SaaS company.
Yeah. And so efficiency, right? Because it's the blockchain is about efficiency. AI should create efficiencies, right? And I think that that's always something that we're aspiring for. And just to go back to your point, because I spend a lot of my day job as Web3, VP of Web3 growth at a SaaS platform, I speak to enterprise leaders and I see how some of them have completely abandoned what they were developing within, I guess, using Web3 tools to AI. Others have continued to build and commit to the problem they're solving, but they might not be able to get the buy-in from leadership who doesn't understand the technology completely and says, oh, no, let's figure out what we can do with AI, right? So I see that in my day-to-day. You have some institutions who are clearly committed and they can see the product cycles, the financial cycles, and they've got a hold on it. Others, they move, right, with the sentiment, which then, once they realize that nothing's going to solve all their problems, AI is not going to solve all your problems, Web3 is not going to solve all your problems as a business, they'll come back with some of their competitors will have excelled, right?
I think we love being emotionally attached to things. I think it's all over the same. It's all entertaining. Apple's about entertaining you and delighting you with beautiful technology, right? The best movies do that. The best toys do that. The best products do that. And that's what it has to be, is the consumer doesn't care what technology it uses. When you talk about the internet, you don't talk about TCP/IP, you don't talk about protocols, you just talk about the fun thing you did online. Yeah. And AI and Web3, it all needs to get to the same place, that we just talk about delightful, engaging experiences, and the consumer doesn't have to know how it works. Like, that's when it's going to work, right?
Yeah, totally. Anything to add on that?
No, I as usual, totally agree with what Susie said.
Well, listen, it's true. I'm actually at Epic Games tomorrow moderating a panel for Digital Fashion Week, and my 7-year-old, who's obsessed with Minecraft and wants to film tutorials now for YouTube, I told him I was going to Epic Games, and he's like, I don't really care. Can I go back to play Minecraft? I don't really care about who's developed and the technology. I'm like, do you want to? He's like, I just want to go back to playing my game.
I don't get any credibility for making games. It's fun. You'd think that. Right. You'd think my 14-year-old would respect that his parents have been making video games for 25 years. It's the most ridiculous things he gets impressed with, not that.
Yeah. Well, I guess also no matter how cool your job is, your kid's never going to think that you're that cool. So, all right, we have 2 more minutes. Do you have anything, either of you, I guess a minute each, kind of closing out the panel that you want to add that we haven't covered today? So.
I would just say, while we've been sort of presenting a gloomy perspective maybe of the current market, that businesses are still getting funded and they are still raising follow-on funds in Web 2 and Web 3. There is an active market. In fact, the pension funds are looking, I think, at deploying more into the venture sector at the moment in terms of putting more into the pipeline at the top. And I think it just fits in an overall climate. The macro climate is quite gloomy at the moment, but don't lose heart. Persist. Successful founders have a degree of resilience and a degree of stubbornness, which is partly why you're a founder in the first place, because you're so determined you can do something new that no one else has done. So don't give up and just make sure you're smart about how you present what you want to do, and you're smart about how you try and de-risk it for your target funding audience, be that angels or VCs. So you put yourself into their shoes, you think about, well, what would I want to see to de-risk this, to make this seem like a slam dunk where I can actually tick the box to say there's going to be really good product market fit, people are going to want this, they're going to want to use it, they're going to want to play with it, they're going to want to buy it. And, persist and go ahead. And if you're in the position where you've already raised and you're thinking about the next round, well, think very carefully now about your cash burn, when you're going to target that next round, allow a longer time frame than you might have done a couple of years ago. You're no longer going to get a deal done overnight, which was happening in our space in some instances. And also think about what milestones can you achieve or show, or what hooks can you put to ensure that you do get that next round of funding. And again, looking at the burn rate, not just to extend the runway to the next funding round, but also to make the quantum of the next funding round a manageable size, so it's not too much of a deterrent for investors. Investors get worried about, at times like this, they get worried about a permanent bottomless pit of a cash hole. Sometimes companies got away with it. I mean, Twitter got away with it for years. but ultimately, at this point in the market, people are looking to find a way that the cash burn is manageable, and or that they can see a road in sight where ultimately you'll get to a cash flow break even, because you're not going to continually be able to buy market share and grow exponentially unless you can show a sustainable business model is at the end of the rainbow.
Which is better in the long run.
Yeah.
Better businesses, right? Brilliant. Well, thank you so much. Can I get a round of applause for our wonderful panel?